As mentioned, I'm an agrologist. I have a consulting firm. I serve as executive director for the Canary Seed and Mustard Commissions in Saskatchewan, the Inland Terminal Association of Canada, run what we think, my wife and I, have a pretty good home-based ag consulting business, but we also farm on the side down in southwestern Saskatchewan. And 3 months from now, that'll be the office looking out over the seeding equipment pulled behind that old tractor, and it'll actually be a different seeder this time around. So not very far away, 3 months. So like Grant says, everybody's making plans for the upcoming growing season, what's going to work, what isn't going to work. And I'm afraid I'm not like a lot of the farmers in Grant's videos. We're small producers and not having luck advancing. There we go. So rather than those, this is a 15-year-old mini high clearance sprayer. This is small time, eh? But we're smaller producers, a little under 1,500 acres. So we try to keep our costs down. We try to do some different crops, different farming practices, but we're still very interested in insurance. But we're not 5,000 or 9,000 or 15,000 acres like some of the neighbors are. And this shows that I have no shame at all when it comes to farm equipment. And if a green John Deere flex header will work on an older red Massey combine, I don't care what the neighbors think. We'll just do what needs to be done to try to get the job done. And that's actually combining in a crop of chickpeas. So the crops in 2015, mess around with some different things. Did some Kabuli chickpeas as a common crop for us, but we tried to intercrop them with flax. A number of benefits agronomically that we think will be a benefit. Other mixed flax, brown mustard, large green lentils, and canary seed. So that was our crop mix, and we'd had a number of good years and was starting to feel pretty bulletproof. And we got kicked in the butt this year. That's probably the best crop. That's the intercrop with the flax and the chickpeas, but it grew about 8 inches high. It just didn't rain. We seeded it into pretty good moisture, and it just didn't rain for months. And by the time rain came, it was pretty much too late for us. And as Grant said, I did have Global Ag-Risk Solutions. And at one point, spraying for weeds, and the crop looked so dismal, you're going, we're spraying to control weeds. In 2 weeks, we might be spraying to just kill the crop because there isn't going to be anything here if it doesn't rain. And I was going, should we be spending money on herbicide at this point? Should we be spending money? And then I remembered, oh, we have Global Ag Risk. It really isn't my money at this point. It's Grant's money. That if this thing ends up being a total write-off, Global Ag-Risk Solutions covers seed, fertilizer, chemical, and whatever margin above seed, fertilizer, and chemicals you choose. So it was some solace to know that you had that kind of coverage and you didn't turtle and not do the things you inherently know you should be doing, but worried about where the economics is going to end up. So this is, and I like the fact, Gars, one of the things I like is they go through your accrual accounting and they throw out the numbers and do some averages, and hey, they're talking the same language as your chartered accountant is talking when you're getting your books done. And these are my numbers. And this is the 5 years before this year, which we thought were looking pretty good. Average revenue from grain, $460 an acre. Inputs have averaged 119. Now, the Gars program, whatever you spend on inputs, seed, fertilizer, and chemicals, whatever you've spent in the past, and plus I think, if I'm not wrong, Grant, they let you go 40% higher than that without even asking permission. So basically, go spend whatever you think you need to spend. So the gross margin in the 5-year average is $340 an acre. Okay, so what has to come out of the gross margin? My labor, power, and equipment, according to my accrual financial statements, is $139 an acre. Grant ran through what this means. Land building finance, mine are low because we own the land, we're not paying cash rent, so that's property taxes, and we finally got our debts paid off, so the finance portion is pretty small. Insurance premiums, whether I'm doing some crop insurance. When I took Global Ag-Risk last year, I did take some small amount of crop insurance as a little extra, because if you buy the low level of crop insurance, it's still pretty cheap and gives you some other benefits. Some years I've bought hail insurance, but hail insurance is pretty expensive. Didn't buy any last year. So net income over the last 5 years has been $190. So this sort of tells you what you need to protect as far as how much of that gross margin, where you're at, and how much coverage you want to buy. Now the problem with crop insurance, and crop insurance is in many ways a very good program, but just inherently in how crop insurance works, there's some problems with it. And I'll use an example on large green lentils. Now you might say, oh, he's talking lentils, that little niche crop. Well, that little niche crop is 3.7 million acres last year in Saskatchewan, and it'll probably be 4.5 or 5 million acres. It's bigger than your soybeans and corn here are in Ontario. So lentils isn't a little crop. Large green lentils is a subset of the larger red lentil acreage, so it's a little more specialized. But last year, crop insurance, if I bought 80% yield coverage, based on my average yields over the years, it gave me a coverage of 1,019 pounds an acre, and the price they were using in 2015 was 27.2 cents a pound. So $277 an acre coverage for a premium of $11 an acre. But it's a production guarantee, not a revenue guarantee. So what happens if let's say you grow 1,019 pounds right on, and you're not in a crop insurance claim situation? But what happens if the price has dropped to 20 cents rather than that 27 under crop insurance? Do you still get $277? You got no assurance. This only guarantees you bushels. So certainly for the bushels that you get paid out on crop insurance, it provides you some revenue insurance. But it doesn't give you any guarantee that the price isn't going to drop off the map. And that's one of my concerns, is that of why that's a fault I see in the program. That's why I was interested in Gars global ag-risk coverage. Crop insurance does have some advantages from a farmer's point of view. It's crop specific. So if I have trouble in the large green lentils and don't have problems in the other crops, crop insurance might pay me on those large green lentils. Gars uses the whole income approach on all crops across the whole farm. So that is a consideration as to how your coverage. Fairly easy to determine whether you got a claim or not. I think I got a claim in lentils. They'll come out and measure the bin, see how much you sold, do the calculation. Yeah, you're short, here's your check. With Gars, it seems fairly simple, but it becomes a little more complicated because they have to know how much is in the bin, but they also have to determine a value on it, and you haven't sold it yet. So I'm in a small claim situation for this year. We just got our butts kicked. I didn't... I bought $100 an acreage, the seed fertilizer and chemicals, plus $100 coverage above that, and I'm teetering on whether I'm in a claim situation. Well, it's going to take a little while to figure this out because much of this grain isn't sold. A little bit of change in the value of that grain sitting in the bin, or maybe I haven't estimated perfectly how much is in the bin, may or may not put me in a claim position. So it's a little more difficult to come out and decide in Gars sometimes whether you got a claim. Now, if you got a hailstorm that wipes everything out, that's zero. That's pretty easy to calculate. But in some other instances, it takes a little longer. Crop insurance comes with some other things like an unseeded acreage benefit, unseeded acreage coverage. If it's too wet to seed, there's some coverage there. If you get a crop established and you get it blown out or doesn't establish properly, there's a little bit of coverage there per acre that is an advantage. And you can buy the low level of crop insurance coverage and get this advantage. AgriStability, we'll spend just a minute talking about it, and it was mentioned. As I go around and talk to producers everywhere, maybe people sort of understood how this was supposed to work way back when. And they know there's been big changes, and they hear all sorts of different things about it. Some of the accountants will say it's gone from being a great program to just being a good program, but you should still be in it. And it's reasonably inexpensive to stay in, but it's a little bit of a pain, and you got to pay your accountant some extra dollars to file it. And there's a lot of producers that have just given up with it. It's not bankable. They can't predict it. And if the government, in its wisdom, decided we're going to revamp it or we're going to conk it on its head and put it out of its misery, I'm not sure there'd be a lot of complaints at this point, even though it's considered, one of the major planks in farm support programs. Bankers won't look at it and say, oh yeah, you're going to get a big claim. I was just in to see the accountant. The year end was October 30th on the farm. We were just in to see the accountant. He's put all the forms in. We're going to get anything out of AgriStability after this bad year? Well, he didn't really want to say. He works with this all the time. He didn't want to say. So, and that's sort of the situation that most people face. There's just very little confidence anymore in what AgriStability can do or not do for you. AgriInvest, and I know we haven't gone there, and you know, this sure doesn't make me popular on Coffee Row when I write a column in the Western Producer saying, AgriInvest, just, I love it, keep sending me this money, keep sending me this money. You know, we made more money over the last 5 years before this bad year off the farm than we did in the consulting business with this little farm. But keep sending me money. Every year, keep sending me money. You know, it just, from a public policy point of view, money with really no strings attached and no larger end game, I'm not sure that is going to be justifiable over the long term. There's ways you can revamp this, but right now, it's not meeting policy objectives. There's lots of people, lots of producers like me that take the money, glad to have it, match it, put it in a bank account, watch it grow, and what are we going to use it for? Well, we'll try to outbid the neighbors for the next piece of ground when it comes up for sale. Now, is that what that policy, is that what that program should be there for? I think it's a very reasonable thing for taxpayers to take some of the huge cycles out of agriculture. And no use letting businesses crash and burn in real bad years and bad economic times, but why give free money and you give more money to bigger producers that are successful in good years and they sit it in a bank account? And I'm sure some people use that as risk mitigation if they have a bad year. But after a number of good years, I think it just probably contributes to rising land prices. I'm not sure that that program is meeting its objectives. Hail insurance works in some cases. In some of the provinces, there's some government portion of this that receives some extra subsidy. But in Saskatchewan, it's all private, whether it's through municipal or co-op hail or where there are a number of private companies. But in some cases, the cost is just prohibitive, and that's the case for me. 6.5% premium is the base rate. On most of the crops I'm growing, it's double that, so 13%, and you're only covered just for hail. Only covers just hail at 13% premium. So for me, if I have a really good crop coming and I'm feeling, maybe I'd put a little bit of hail insurance on. But otherwise, I would stick with the other programs in my instance. For 2016, I'm probably going to go with crop insurance rather than Gars. And I talked to Grant before this, and he almost had me convinced that maybe I've got my math wrong or not looking at it. But my reason is that I've established contract prices for the lentils, chickpeas, and brown mustard at very profitable levels, and that's taken much of my downside price risk away. Now, Grant was telling me, well, why'd you do that? You've got contracts with act of God clauses, meaning that if I can't come up with the product, I'm not on the hook for buying it out. He says, you should go back and renegotiate those. Talk to those companies, make it a deferred delivery contract. Get 2 or 3 cents more per pound on all of those products, and tell them that if you don't come up with it, you'll buy the contract out, because Gars will cover that as a loss. And I'm going, maybe that's what I should have done. Maybe I should have negotiated higher prices under a deferred delivery type of project rather than the act of God. We're going to have to go back and look at that and see if they want to revisit those contracts and redo the numbers. But that's why, up until now, when I do my numbers, I've been leaning towards doing it through crop insurance. Averaged over the number of crops that I plan to grow, and I have to project this because Saskatchewan hasn't come out with its numbers for crop insurance yet. I think I can get coverage of $280 per acre for a cost of about $10.50 an acre. To get the same coverage of Gars, assuming my inputs would be about $150 an acre, and they'll cover whatever inputs I spend, and a fixed cost margin, then I need $125 of a fixed cost margin over and above that. My cost in Gars would be about $17 an acre. So in that back of the envelope analysis, I thought, maybe I'm going to go with crop insurance this year, but maybe I'll go back and see if we can turn some of these into deferred delivery contracts. We'll end up with a better year, and if we end up with a good year with deferred delivery contracts, I'll make a whole lot more money that way. We'll have to do some more thinking about this. The deadline is pending, however. So that's the only wisdom I have. I think that Gars has really shaken up the whole idea that all of these support programs have to be coming from the public sector. Look what Gars can do, and it doesn't get any government subsidy. Crop insurance is get what? Half of it's paid by government, and it can still barely compete. So I think that going forward, there's a place for a mix of public and private protection and farm safety nets and risk management programs. Look forward to the Q&A and look forward to the next presentation. Thanks very much.